Session starts now. Okay, so basically market structure, Mr. Richard, is what builds the market. It's what builds the upward movement, the downward movement, and the sideways movement of the market. We just don't enter trades. Like, we just don't open our charts and you say, I feel like I want to sell, or I feel like I want to buy. You have to work with what you call market structure. And this market structure is the whole story. It's like the book that tells you everything about what you're going to trade. It's not a book actually. To some people, you might actually think it's a real book. Okay, so I'm sharing my screen now. Depending on which concept you are using, we have different terms that you can use to define market structure. We have what you call price action, Mr. Richard, and we also have what we call BTMM. Right. These two, they define market structure in a different manner, but the concept is almost the same. For us to be able to say that we are now going to trade, you open your charts, start from your larger time frame, going on to your smaller time frame. This is what you look for to determine market structure and the structural points that you are in a market. We have what we call a high, we have what we call a low, right? But depending on the direction you are taking, we call this a higher high, right? And we call this a higher low. But for you to be able to say that you are in an uptrend, you need to break this high and make a new high. You also need to set a new low. This new low will be responsible for breaking your previous high, right? By knowing this, you get to know what we call the market direction. And this is part of market structure. But remember, we don't always remain in an uptrend. We also have to go in a downtrend, right? Meaning that at some point, you are going to come and leave a high. You are also going to come and leave a low. But to start in a simple way, as long as you don't come and make a new low which breaks this high, but which comes and breaks this previous low, we say that we have broken market structure. Because the structure that you were having was this, the structural manner of leaving highs and lows, highs and lows, highs and lows, going to the upside. But just because you have broken a low, that was a subject of going to the upside, which is this one here. Then we say you have broken market structure. Thus, you have changed from an uptrend and now you are moving in a downtrend. And you can find this in M1, M5. Let me mute someone. There. Right. And you can find this in M1, M5, M30, M15, H1, H4. Market structure is found in each and every time frame there is on your charts. Okay. Right. To put it in a simple manner, we have an impulse, a correction, we leave a high, we leave a low. We break that high, we have an impulse, a correction, we leave a high and a low. We also have an impulse and a correction, we leave a high and a low. But at some point, it will fail to come and break this high. It will come and break this low. We have now changed from the uptrend. We are now going for the downtrend. That's when some of you guys will say, we've broken an M and we come for a retest, impulse, correction, impulse, correction. We have changed the market structure. At this point, we've broken market structure. And we also don't remain in a downtrend. At some point, we'll come and fail to break this low, and we'll come and break this high. And as we break that high, we also have broken market structure going to the upside. And this can be found in both M1, M5, in any time frame. Okay, to make things a bit easier, we can look from our charts here. So I'll share my screen here. I was doing some analysis for V100, but well, I can still continue to make a presentation using this chart. Okay, let me try to do this. Okay, right. Let me try to do this so that we all see. I think we can all now see. Right. Which time frame is this? This is M1, this is M15. Right. So basically what we can see here, let me drag my charts down a bit, guys. Let me start from a point which is not as hard as we can want to. So we have a move to the upside like this, right? This basically told us that we left a high, we left a low. I think even looking back here, let me do this. Let me do this so that we see in a clear way. Right, like this. Okay. Where's that rubber item? I want to erase this. Right. So as you can see, guys, here what we had was we were rallying in a downtrend. And we can see that we left lows and highs, going to the downside, right? Which one was our last high? Our last high was this one. Sorry, it was this one here. Why? Because the low broke the previous low.
Oh, this is brilliant. This is brilliant.
And the fact that hey, let me mute someone there. Okay, mute. Oh, sorry, I was muting someone. And the fact that we broke a high here, here from this point meant that we are now switching from a downtrend going to an upward movement, meaning that from this point we would have taken a buy and still got profit from it, right? So from this point up to around this point, we would have made some profit, right? Why? Because we broke market structure, which told us that we are downtrending. Let me repeat again. We had a high, a low, a high, a low, a high, a low, a high, a low, a high, a low here, a high, a low. This low was broken. We came, we broke this high, meaning that we have now switched to an uptrend. If you look at your previous movement, no high was broken, no high was broken, no high was broken, but this high was broken, meaning that we are now buying. And as we buy, this high failed to get broken, right? And what we are now focusing on to say that we are in a downtrend, we have to break this low to know that we are going where in a downtrend, because this was the previous low to the highest high that we saw, and this low was broken here. This is the retest of the low, and meaning that we now have a new low, a new high, 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 a new low, a new high. There is no low that was broken there. Let me rub again so that we all see. I'm rubbing so that we can see in a clear way for the newbies. Sorry, let me move my charts here. Right. So as I was saying, let me come back again. We had this low which is visible. We broke it here. This is the retest. A new high, a new low, new high, 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 new low. So this means that we are in a strong downtrend, right? Going down there. And this is the high, and this is the new low. So if we come and break this previous high like this, then that means now we are doing what? We are going now in an uptrend. So we'll be setting new highs, new lows, new highs, new lows, new highs, new lows. And if we get to an event that we fail to break this high and we break this low, then that means again we've switched from an uptrend going where? Going to a downtrend. So basically, this is what you call market structure. For the guy that asked me what market structure is, I forgot your name. Right. Now, to accommodate more questions, let me scroll down. I think I'm done with that one. It's pretty much a big topic, but I'll just try to bite it in pieces as I did. Okay, let me scroll down. Okay. What's happening? Okay. Then there's someone who talked about peak formations. Right. Peak formations now are best explained with BTMM. And let me try to explain them in a way that I think you can know, or that you can get. Okay. So basically, a peak is the end of a trend going into another trend. It can be the end of an uptrend going to a downtrend. It can be the end of a downtrend going to a uptrend. Right. So at the peak now, we say that most peak formations, please take note of this, because some people usually they get it wrong. Most peak formations are formed on major resistance and major support points, as well as supply and demand points. Right. Peak formations just don't form anyway in the market. But sometimes we can say we've broken the low for the week or the low for the year. We are about to form a new peak. That's when we use additional confirmations such as EMA lines. So at the peak now, the guy was asking me about market structure. I forgot to tell you how to define market structures in BTMM, but anyways, it's okay. So we say that we have a peak, right? We have level 1, level 2, level 3, which is a peak. And then it's either we reset or we move levels down, right? So most peaks are characterized by W and M formations. Whereas we have a first leg, a second leg, a first leg, a second leg. And this one, we can call it the neck of the peak or the neck of the M or the neck of the W. We have peak highs, we have peak lows. But to put it in a simple manner, remember I was talking about market structure using price action. To put it best, we have the first leg bigger than the second leg. This one depicting our high. And this high not being able to break this high, thus giving us an M, which is a peak. Or we can have a W, whereby we have the first leg being lower than the second leg, this being the lowest low, and this low failing to come and break this low and coming to break structure here. So depending on how you take it and which concept you are using, you can try to incorporate it. But now the thing with BTMM is we have what you call the 513 cross, and we have what you call the 1350 cross. The 513 cross, this is the 5 EMA and this is the 13 EMA. The 1350 cross, this is the 13 EMA and the 50 EMA. The 5 and the 13 cross, basically, they give you entry, and the 13 and the 50, they confirm a peak and shows you that you are now entering into level 1. So this is for peak confirmation, and this is for entry. It's a very broad topic, but basically, to put it in a nutshell, this is how you discover peak. Now let me move on to the next question. If I don't answer you the way that you like, or if you're not convinced with the way that I answer a question, you can also type on the chat and I'll revisit that question so that I can re-answer it or rework on it. And if you have any questions, you raise your hand and I answer you, but you only ask questions based on what I'm presenting because we have little time. Sorry for that. Okay. Then there's someone who says manipulations on derivative. The best way to treat manipulations is to use proper risk management. You can't tell when the div is going to manipulate you. But now, as you progress with Forex, you get to know different terms. Like there are no such things as manipulations. If someone, if we have guys who works who uses smart money concept, they can basically agree on this, that these are just banks which are trying to move the market. And if you get deeper with SMC, you can be able to notice when they are going to do it and how they are going to do it. And then someone is saying best 2 for V75. Trust me, I don't know. I only know that if you study your price action, if you study your BTMM, if you study your smart money, your ICT, and just be able to be good at taking your own moves, that's the best too. Okay. In fact, they say the best tool in Forex trading is your eyes, because what you see is what's happening. If you see a downtrend, it's downtrending. If you see an uptrend, it's uptrending. And then there's someone who's asking, what is the best amount to start with for a beginner? That's a very controversial question, because we have two sides. There are people who believe in equity, in more equity, and then there are people who believe in less equity. But basically, I believe in everything. It just depends on what's on the table for that moment. Because I've risen an account as less as $10 to 1,000. I've also blew an account with 1,000 to $0. I've also risen an account with 1,000 and I've also blown $10. So it depends with how you trade in the risk that you're putting. Best tool for boom and crash. The best tool for boom and crash is knowing your support and resistance. It's knowing the time frames that you are using. Basically, I can't say that this is the best strategy that there is, because I know a lot of people out there have best strategies, but I usually mark my support and my resistance, my point of interest zones in 1 hour, then I take my trades in 1 minute. Then there's someone who's asking me about order blocks. I'm very sorry, I've never done them. I don't know about order blocks. I don't know about order blocks. I would be lying if I say I know about order blocks. I don't know about them. Then derivative entries. I think I answered. I'll come to that point. Okay, then there's someone who's talking of liquidity. Liquidity basically is where money lies. Like we can be trading, right? And we see that there are people who like trading double tops, double bottoms, equal lows, equal highs. This is where liquidity lies. What does that mean? That means if you see where a normal trader sees a W, let me not get here. Where a normal trader sees a double bottom or my equal lows, here there is liquidity, there is money here, there is money here, there is dollars here, there's dollars all over here. Why? Because the moment that you see that you formed a double bottom or equal lows, you want to buy. Your stop losses are here, right? Right. I'm not answering that guy who was asking me. I'm also answering you here. That guy was talking about manipulation. And just because you are so confident that you see a W, you buy, or that you see a double bottom or equal lows, you buy. But what you don't know is, okay, let's not talk of it in terms of a W. Let's talk in terms of equal lows. Let's say you see equal lows and you buy, your stop loss is here, right? But remember, you are not the only one who's able to notice these equal lows. A lot of people, they want to trade these equal lows. Who am I referring to as a lot of people? Just normal traders, just you, us, people who don't know much about these concepts. They buy and buy and buy and buy and buy. There's plenty money over here because their stop losses, right? So what happens is banks or institutions, they push price down. Let's say they inject 1 million down here, they hit your stop losses. So they are forcing the market to move in the downward direction. And then just because they put that 1 million to sell and move the market, they now put, let's say, 10 million to move the market in the upward direction. And how does this work? It just comes and clears the stop losses, meaning that there's money taken here. And by the moment that you see that your stop loss has been hit, you say that your setup is not violated, you try to get in a sale. By the time you're getting in a sale, they're injecting 10 million. And when they're injecting 10 million, they're now getting into profit. Let's say they make 30 million by just buying, right? And then they come back again. And then they want to close this 1 million that was lost when they injected the 10 million. They close it in profit or at break even, and then they continue in that direction. So you have seen that the market wants to buy, but the reason why you bought is the reason why you are also going to get hit, because your stop loss is here. And what they want to do is they'll just want to come and clear money there. And then they'll move in the right direction. But as a normal trader, you went in a buy, you were stopped out. You went in a sell, you were also stopped out. By the time you wanted to get in that buy again, you were also stopped out. When they came for the break even, you are tired. They ran away with the money, they've made money. It's pretty much a very big topic to talk about. But remember, anywhere where you see equal lows or equal highs, those are high liquidity area zones, and they're interested in those zones. Mostly they're going to come in those areas. Okay. Identify key points of interest. Right. This is okay. Sometimes we might be affected, or you might be vexed with the terminology that people use. Point of interest usually are just these points. Your support point, your resistance point, your supply point here, and say maybe your demand point. Those are just points of interest. Basically, these are points where we are expecting price to react. Generally, that's it. I have many questions to answer to, so some of the questions I'm just answering in a fast track, guys. Forgive me. Improvement price crash spike strategy. This one I don't share with people here. Can you share the presentation? I'll put it on YouTube, don't worry. Liquidity hunt, I've just talked about liquidity hunt. Someone is busy marketing his product. Please, may you explain resets and how to trade them? Okay, for those who know BTMM, a reset, basically we are saying we have a W, we have level 1, level 2, level 3, but we need to continue in the upward direction to complete larger time movements. So please don't play with the whiteboard. Whiteboard is for the say. Okay, thank you. Let me share it here in a way where you can actually see. Oh, come on. Guys, there's someone who's playing with the whiteboard. Please. Right, thank you very much. So someone is asking about resets. So this is basically, to those who don't know what a reset is, these are it's hard now to explain when someone doesn't actually know it from the very beginning. But these are moves that are done to complete larger time frame movements. So let's say in M1, you have identified your W, your level 1, your level 2, your level 3, right? So this is your peak low and peak high. So this is an M1, but we both know that M1 is to complete the larger time frame move, which is M5, right? It moves one level down here, resets by forming another peak here and going level 1, level 2, level 3, right? So basically the way that you trade a reset is the same way that you trade a peak, because the same EMA lines that you're getting here are the same EMA lines that you're getting there. The same first leg that you saw here, the same first leg that you see here, the second leg here, the second leg here. So in the event that you're in a downtrend, we have an M, level 1, level 2, level 3, and we have reset, which is an M like, then level 1, level 2, level 3, a reset. So remember, for the guy who was asking me about reset, this is one full cycle, but it's level 1 in M5, one full cycle, but it's level 2 in M5, one full cycle, and it's level 3 in M5. And now this whole movement, if you were to project it to M15, this is one level. I think you understand what I'm saying. We will have a free Zoom meeting based on this. But just because you asked about resets, I know it, you know what I'm talking about here. After there's someone who said, after break of structure, how do I identify entry points? Or rather, in a downtrend, how do I see that the market is finishing, creating higher low, and it's now ready to continue downwards? Right. We project moves starting from M1. It's easy for you to see a break of structure in M5 if you first see a break of structure in M1, because M1 confirms everything. And your entry points now, we have, this is actually also a bigger topic, but to put it in a nutshell, when you break structure, right, like this, we usually have what you call IFC candles. And at some point, we have to come and mitigate these areas where the IFC candles were induced, right? So now, hysteric. To those who don't really know much, you can just do this. Whenever you have break of structure, usually we have a little consolidation. It goes. Mark this area. When price comes back to this area, sell it, and then you're good to go. You can, these are things that you can check on your charts. And if you don't find them, come and beat me. Okay, great insight. How to spot sniper entry on price action. This is a complex question. I'll come back to that. Tips on V58, bro. You are quoting this. For V58, I only use the Fibonacci. I trade V58 using retracements, meaning that whenever I set a low, a high, a low, a high, I measure these retracements using the Fibonacci. I enter at my 71 or 70, and I sell it. Basically, that's how I trade V51 is. It's so unfortunate, guys. And since that time, I have less than a minute remaining, and I don't want to keep this long. I haven't eaten anything yet. But thank you very much for joining my Zoom meeting. Tomorrow, we are going to be having another one. This video is going to be shared on our Telegram channel. If you don't have the link to our Telegram channel, WhatsApp me on 0712 717 911. This is +263 here. +263 712 717 911. I'll give you the link to the groups. If you have any questions, come to my inbox. I'm gonna answer you. Thank you very much, guys. Have a good night.